What is volume? A measure of how much of a given financial asset is bought and sold in a given time period. It could be a second, a minute, or a day. Because volume is used to measure relative market movement, it is an important indicator in technical analysis. Securities with higher daily volume are more active. In volume movement, the higher the volume, the more important the movement, and the lower the volume, the less important the movement. How do we know the volume? Every transaction between the buyer and seller of a security contributes to the total volume of that transaction. In other words, if the buyer accepts that the seller sells at a certain price, the transaction is completed. For example, if there are 200 transactions in a day, the volume of that day is determined as 200. If investors hesitate about the direction of the market, futures trading volume will increase. Overall volume tends to be higher on Mondays and Fridays, close to the market opening and closing times. Volume is important in technical analysis as it is used to determine the importance of market movement. If the market moves sharply at a particular time, that move will either gain confidence or be viewed with suspicion. The higher the price action, the more important this analysis is. If the opposite happens, that is, if the volume is low, the movement is seen as less important. The volume is divided into two: volume or purchase volume. Below is the volume or sales volume. It is the situation where the price of a high-volume security rises and this rise is accompanied by high trading volume. Down volume is when the price of the security falls, accompanied by increased volume. There are three types of charts. These are the bar chart, balance trading volume, and finally the Chaikin money flow. Mostly bar charts are used. This chart is used to identify trends. When the bar chart is higher than the average, it shows a particular sign of high volume or strength. Analysts study bar charts as a way to confirm a price move. When volume moves in the direction of the trend, there should ideally be a larger pullback. This indicates weaker pullbacks in the direction of the trend. Increases the probability. When the bars on a bar chart are higher than the average, it indicates that there is some strength. They use volume as a way to confirm a price move by examining the bars on the bar chart. When volume moves in the direction of the trend, it should ideally be lower during the larger retracement or consolidation period. Showing pullbacks is a factor that affects the resumption of the trend. The use of volume support and resistance breakdowns. We use it to identify price reversals, trend confirmation and bullish signals.